Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Wednesday, August 5th. Okay, SpaceX came out after the close yesterday, rallied 9% yesterday, moved up a little bit, and then the market starts selling it off aggressively, and it's down. I think it's down 8 or 9% today. Actually, maybe a little less than that as time went on, but certainly its lows were down there. So the problem was, their earnings release was, broadly exceeded Wall Street estimates, which was good in terms of their earnings report, but higher than expected spending on AI. The market's looking at is and wringing their hands and selling off the stock. So the CapEx went to $28.5 billion in the first half of this year, more than 4 times its spending a year earlier. And that's what the market seems to worry about. It's worrying a lot about when it comes to the hyperscalers. We'll see in a little bit. Maybe they don't really have that much to worry about. So Musk is steering the vast majority of SpaceX's expenditures towards AI. They generated $3.4 billion in revenue from AI during the first 6 months, less than half of its connectivity business, which is Starlink. Now, he expects that the cadence of AI development to improve dramatically, and SpaceX posted a narrower loss for the AI business than analysts were expecting. Overall, revenue was $7.8 billion in the second quarter versus $6.8. That's a pretty solid beat. And they were expected to lose 23 cents a share. They lost 9 cents a share. Also a really solid bit. But the market's worried about, oh my goodness, the capital expenditures. Now Musk says he expects to reach more than $100 billion in annual run rate by the year's end. He said, actually, if we didn't do anything, we would get there. Now, analysts are a little, less optimistic, and Elon has a reputation for being, very aggressive. They don't expect annual sales. They expect annual sales to more than double this year, and revenue isn't expected to hit $100 billion until 2028. Now, one of the analysts did mention that unpredictable spending on AI, excessive capex, but also the market seems to be worried about the release of hundreds of millions of locked up shares that start releasing tomorrow. So I want to talk a little about the unlock. In Spectrum Markets, Brent Donnelly did actually a really good piece on that. I talked about this yesterday, about, I think, 900, 900 million shares are unlocked tomorrow, and then another 300 the week after. Now, this is the important part. The IPO sold 556 million shares against 13 billion shares outstanding. So only 4.2% of the company is available to trade. Now, only 10%, so 1.2 billion over the next 2 weeks is 10% of this, but 912 million shares held by employees and early investors unlocked tomorrow, which is 1.6 times the existing public float, which is pretty big, which is the market, is really worried about it. Now, some people will sell because they want to monetize and need some money, but a lot of people will not. But this is in Elon Musk's huge 6.4 billion shares don't unlock until next year. Now, Elon probably doesn't sell a lot of it because he wants to keep control of the company. The important point that Brent makes here is the tension is between these bearish facts and the fact that everybody knows these facts, and everybody knows that everybody knows these facts. So he compares to the lockup, unlock on SpaceX to CBRS, which is Cerebras, that was the IPO a few months ago, Rubrik, and then CoreWeave. He goes, there was a lot of media attention, and SpaceX media attention, I didn't put the chart in, was much bigger than CoreWeave and Rubrik. And we'll look at a chart on the next page saying that on the lockup day, the lockup expires is, close to a bottom because everybody has priced that in. And his point is that this information is surely priced in at this point, and the imminent supply shock is more likely to be a red herring. That means, something that's distracts your attention but is not useful, than a useful bearish indicator at this stage. And he said, if you could look at these 3 other stocks as a guide, you could look for a 20% rally in SpaceX in the next 20 to 40 trading days. So here's his chart. And he created this chart along with data from Bloomberg. Now, this is performance versus QQQ, the Nasdaq 100, which is important because otherwise, if the market's in a downdraft, your going, or in a huge rally, that won't tell you very much about what happened in the lockup. So if you compare the performance performance versus the Nasdaq 100 in the days following the unlock, it'll tell you something interesting. So you can see here the black line is SpaceX, and tomorrow is the unlock. Purple line is CBRS, Cerebras. The blue line is CoreWeave, and yellow line is Rubrik. So you can see that on unlock days, you could go down a little. You could underperform, maybe up to about 10% or so, the QQQ in the first 3 weeks, and then they all rally. They all that stuff is digested, and then they rally, somewhere about 20% or so. So the point is, this is probably could go a little lower, maybe get down to 100 or thereabouts, but the likelihood is we've seen most of the impact. Remember, the high was 225, the low is 104. We're trading, I think, around 112 or so, or 113. So most of that has been priced in. So you can see SpaceX over the last, the 5-minute chart over the last few days, the low on Monday was just under 105. Yesterday's close, 125.82. And today opened at 112 and traded at a 109, 117 range. So the point is, everybody knows that the unlock is tomorrow and next week. It's probably all mostly priced in, if not all. Okay, so this Kobesi letter is a really popular letter that comes out on Twitter. I think you can buy a full subscription, but they had a pretty good piece here. The data is from Bloomberg, and they're saying U.S. stocks are expensive, or are they? And here, it's Bloomberg data. They compare S&P 500's relative valuation versus the non-U.S. stocks. So relatively speaking, in 2020, early 2024, the U.S. as a forward PE was almost 1.6 times the forward PE of the other, of ex-U.S. country, non-U.S. stocks. But the forward PE premium has corrected sharply lower. We're down at 1.2, which is we haven't seen since the pandemic. And the reason, it's very, very strong U.S. earnings. So the valuation, even though stock market's high, it's high because earnings have been great. And the forward PE ratio premium is a lot lower. So U.S. earnings, S&P profits are basically year on year growing at almost 29%. European companies' earnings are half that, at growing at 14.4%, which is why that forward PE overvaluation or premium is 1.2 from 1.6. So you could say maybe they're not that expensive on a valuation basis with the rest of the world. Another piece I found on Twitter, which is good. BCA Research is a paid research house. They usually have very, very good research. And Juan Correa Osa put this up, and I thought this was really good, how important cloud revenue is. First, U.S. hyperscalers cloud revenue growth, annual change. This is Amazon, Google, and Microsoft growing at 43%. Which is pretty amazing. Look at the change from the beginning of 2020, the beginning of 2025 to 2026, from 12% to 43%. The operating margin, and you can see the different ones here, are closing in around 40%, which says that cloud revenue is great because that's where people are storing stuff, where data centers are, how you access the data centers. Year to date, Amazon up 18%, Google up 15%, and Microsoft, after a big charge, is flat. So cloud revenue, really important. And are we potentially underestimating the hyperscalers? A lot of smart guys think that the winners in AI ultimately will be the Microsofts, the Googles, because they actually have a lot of money and they can pay for it. And so they're paying a lot for capital expenditures now, but that's okay because that's a race you can't afford to lose. Okay, Telegraph reports, and I basically put two articles in here just to get a Mideast update. On the left here, Europe to foot bill under new proposal to reopen Hormuz. Iran is considering charging European countries sort of an upkeep, not a toll, but sort of an upkeep charge. And Europe needs it a lot more than the U.S. in terms of certainly of oil, though the other things like fertilizer and things that go through are important to the U.S. as well. This would be a voluntary fund, and it's based on the Aids to Navigation Fund, which is what happens at the Strait of Malacca, where countries, including the U.S., pay Indonesia, Malaysia, and Singapore to basically keep everything, all the buoys and the guides and everything working, a burden-sharing mechanism. And it'll be interesting to see if the Europeans sign up for that, but it looks like they might. And then they also report that the U.S. has used up virtually all of its missiles. Now, that's clickbait. It's used up its stockpiles of missiles in the 5 months of the war with Iran, particularly the Army tactical missile systems, which Ukraine uses, as well as precision strike missiles. And the fact that they're basically been used up, at least in Central Command has used it up, means the U.S. may have to rely on riskier piloted bombing missions. Now, if President Trump decides on large-scale attacks. Now, Iran has virtually no air force and not a lot of anti-aircraft left. It doesn't mean it's no risk, but it's pretty low risk. So you might use older bombs and piloted things instead of the missiles. Now, they've been able to reload from U.S. military supplies elsewhere in the world, but that could draw down things like you might need them in Asia. Although I think we will get plenty of warning if China decides to do anything with Taiwan. Okay. And this is just before I go to press here. Iran says agreement on Hormuz shipping reached with Oman, not an overall agreement, but the shipping route, which is part of Iran, which is part of Oman. Maybe there's nothing in the middle. So a proposed route for shipping. The joint statement is drafting in the final drafting stage, according to the Iranian Foreign Ministry spokesman. And President Trump had said yesterday that a deal was imminent, and so did Scott Bessent. So this would be a temporary route that will remain active for 2 to 4 months. A lot of traffic going through Iran's what they call their territorial waters. Now, what's interesting is while visible traffic through the strait has been limited, millions of barrels a day have continued to cross the waterway, even during periods of elevated hostility in recent weeks. And this is part of what they call a shuttle program. And shuttle means instead of putting a really, really big VLCC, very large crude carrier, and driving it through the Strait of Hormuz, which is pretty risky, they're using smaller tankers, which are harder to hit and don't cost nearly as much to move oil from the terminals inside the strait to. And then they're going to shuttle them off and put them in the larger tankers that wait outside, so the larger tankers are not in danger. The likelihood that this shuttling is going to continue even if there is a deal. So where is Brent? Brent, basically unchanged. And so this downturn, I think, is stalling near 80 unless there's a durable agreement. If there's a durable agreement, I think we can get back into the sort of mid 70s, but right now looks like it's stalling. Gasoline and heating oil, also heating oil, diesel is the same thing, also stalling. They're basically unchanged. Now, gasoline prices creeping lower, a cent lower than yesterday, 408 from about 409, creeping lower very slowly. And this is why the president is upset, but this is how oil prices work. So WTI, which is the U.S. benchmark barrel, the high was 91 a couple of weeks ago, and now it's 75. But the gasoline high was just a week ago at 411. It's only 408. So it's going to take a long time to come down. Okay, earnings. I just put the numbers up here. SpaceX beat beautifully on earnings as well as revenue. So did AMD. They're down 12 and 6% respectively because they didn't beat by enough, and they're worried about the capital expenditure by SpaceX. Amgen, nice beats, especially on earnings. That's the medical company. Pharmaceuticals, 3.6%. Eli Lilly beat beautifully, up 4%. Disney, missed on revenue, but that must be something special because it's up 3.6% on strong earnings, which is pretty good for Disney. Meanwhile, Uber is down 6% after revenue missed. And CVS, this must be something special and non-recurring because 40% is too much of a beat on earnings. So I bet the overall real earnings was actually, maybe they missed on that, down 4.4%. After the close, we have SanDisk and Western Digital, very important ones. Okay, where are we? Stocks are basically unchanged. I'd expected that because we had such a strong move the last 3 days. Bonds also kind of steady. They're consolidating. Crude is consolidating. The one that's really moving, gold and silver. Remember, platinum, palladium had huge days, up like 6% yesterday. Well, it's gold and silver's turn. We'll look at that in a second. And crypto is a little bit higher, but not inspiring. Okay, Nasdaq 100 consolidating here. The S&P 500 after 4 remarkable days consolidating. Comm services and consumer cyclical. That's Google and Amazon offsetting Nvidia and Broadcom. Gold. Okay, gold is breaking the 50-day moving average today for the first time really since the drop in March. Now, this 50-day moving average is coming down relatively quickly, so that's not really a surprise. I think if we can break the 100, that'd be a little bit of a different story. This is because with higher back-end rates, people are thinking maybe we don't have to have rate hikes now, or as many. For a real takeoff, I think you need the fact that instead of pricing in rate hikes, we have to start pricing in rate cuts. But that's not going to be until next year at the earliest. Silver also testing the 50-day. Now, the data today, ADP, 44,000 jobs versus a consensus of around 70,000. That's soft. Now, the payrolls consensus for Friday is 80,000, but the whisper number is probably closer to 65. ISM is okay. Employment is soft. We had a little build in crude, which is good news, and a draw in diesel. But this ADP number, I think we're going to have a softish payrolls. I'm thinking maybe 50,000 or thereabouts. Well, thanks for tuning in. I'll see you again tomorrow.